Welcome to TalkTickers. So today we're diving into Inovio. This is a fascinating one, a biotech company whose stock absolutely soared after reporting a quarter with, get this, zero revenue. So how on earth did they pull that off? Let's break it down.
So, picture this. It's August 13th, Inovio drops their Q2 earnings, and the stock just jumps. Now, this wasn't about sales, not at all, but the market loved what it heard. We're going to dig into exactly what investors saw that was worth a double-digit pop.
All right, here's how we're going to tackle this. First, we'll look at that surprising market reaction. Then we'll get into the nitty-gritty of the financials that made it happen. After that, we'll connect the dots to their pipeline, specifically one key drug, see what management's playbook looks like, and finally, we'll give you our take, the next call, and what we're watching.
So, the big question, right? How does a company with no revenue see its stock rally like that? Well, it's pretty straightforward, actually. The market wasn't looking at sales. They were rewarding something else entirely: execution and a super clear plan for the future. This was all about discipline.
Yeah, the big story this quarter, it wasn't about explosive growth. It was about something, a little less glamorous, but way more important right now: financial discipline. They were basically buying themselves more time. Management put a tourniquet on the cash burn, and boy, did investors notice.
Okay, let's talk numbers. Inovio's net loss was $23.5 million. Now that beat what Wall Street was expecting, which is always good. But for investors, the real number, the one that mattered, was this. That's a 27% improvement from the same time last year. That's a huge signal that management's cost-cutting plan isn't just talk. It is absolutely working.
And you might be asking, okay, how did they pull that off? Well, they did it by slashing their operating expenses by a massive 31%. And we're not talking about minor trims here and there. Nope, these were deep, serious cuts to both R&D and their general administrative costs. It just screams fiscal discipline.
And this chart right here, it just lays it all out, plain and simple. You can see operating expenses dropping from over $33 million down to just $23 million in 1 year. That is the picture of financial control that got the market so excited. So what's the bottom line here? It's all about the runway. On top of the cash they already had, they raised another $22.5 million in July. And what that does is it secures their funding all the way into the second quarter of 2026. That is a ton of breathing room, and it's exactly what they need to get to their next huge milestone.
Okay, so now let's talk about why they needed all that cash, all that breathing room. It all comes down to this: their lead drug candidate, INO-3107. Every single bit of that financial discipline we just covered, yeah, it was all to make sure this gets across the finish line.
Now, before we get any deeper, we gotta talk about the BLA. That stands for Biologics License Application. The easiest way to think about it is like the final exam with the FDA. You pass, you get to sell your drug. It is without a doubt the single most important milestone on their horizon. And here's the timeline that every single investor is watching like a hawk. The target is to get that BLA submitted in late 2025. Then, hopefully, get the FDA to accept the file by the end of the year. If they can manage to get a priority review, that could set up a PDUFA date, that's basically the FDA's decision day, for around mid-2026. This right here, this is their roadmap to actually making money. So why all the hype around this one drug? Well, it comes down to the data, and it's pretty compelling. INO-3107 is for a rare disease called RRP, and right now, patients have to go through surgery after surgery. The data shows this drug dramatically reduces the need for that. I mean, look at this. By the second year, almost 9 out of 10 patients had a huge drop in surgeries, and get this, half of them didn't need any surgery at all. That is a game changer.
Now, Inovio isn't the only one in this race, and management made sure to point that out on the call. They were really quick to draw a line in the sand between their drug and a competitor's. They highlighted their unique DNA technology, no viral vector, and they really hammered home that their trial was more rigorous, placebo-controlled, and that they're targeting patients earlier in the disease. All right, so if you had to boil down the entire message from management on the earnings call, what would it be? It's really 2 words: focus and execution.
And honestly, the CFO, Peter Keyes, he just said it perfectly. Basically, every single dollar is being laser-focused on one thing: getting INO-3107 approved. There is zero ambiguity about their mission right now. It's crystal clear.
Their playbook is actually refreshingly simple. Step 1, be smart with money. That buys them time for step 2, nail the BLA submission. At the same time, they're already on step 3, getting ready for the launch. And step 4 is kind of the what's next, looking for partners for their other tech. It's a really smart, focused, step-by-step plan.
And they're not just thinking about getting it approved. They're thinking about selling it. They see a really clear path to market. They're only targeting a few hundred specialists in the entire US, which means they don't need some massive sales force. They can be really lean and efficient. And the kicker? When you look at similar rare disease drugs, you see price tags over $300,000 a year. So yeah, the potential revenue here is pretty significant.
Okay, so with all of that as the backdrop, let's put on our analyst hats and look ahead. What should we expect to see in the next quarter and beyond? Let's get into our predictions.
All right, here it is, the next call. For next quarter, we're expecting that cash burn to stay right around $22 million, a sign of that continued discipline. As for the stock price, we think it's probably going to trade sideways for a bit, kind of consolidating after that big run-up. The only thing that's going to move the needle in a big way is the main catalyst, any real, concrete news about that BLA submission.
So, putting it all together, we're kicking off our coverage with the market perform rating. Look, the company did a fantastic job shoring up its finances, and the market gave them a well-deserved pat on the back for it. But from this point on, everything, and I mean everything, hinges on a single yes or no decision from the FDA.
And that really leaves us with the big question for anyone looking at this stock. You've got this incredibly clear catalyst right in front of you, but there is absolutely zero room for error. So, has Inovio done enough to earn a spot in your portfolio? The path forward is crystal clear, but man, the stakes just could not be any higher.
And of course, a reminder, this is not financial advice.